Assalamualaikum and hi everyone. Welcome back. I am Madam Naliza Hamid. If you are new here, welcome to my channel. If you are returning, welcome back. In today's session, we are going to learn on how to prepare financial statements for a company, and this is a limited company that is called Vicenzo. And in this session, we're going to learn on how to prepare the statement of profit or loss and other comprehensive income, the statement of changes in equity, and also the statement of financial position. We also will be preparing some selected notes to the financial statement. So if you see here, the company is specializing in manufacturing and selling home appliances. So the financial year end of this company is 31st of December each year, and the directors authorized the financial statement on 31st of March 2021. So the reporting date is 31st of December, but the authorization date is 31st of March 2021. And you have the financial statement, the trial balance for the year ended 31st of December 2020. So the financial statement for the current year here is as at 31st of December 2020. You have the trial balance. So what you can do is you can first classify the trial balance information into what falls under asset, liabilities, equity, income and expenses. But I'm sure most of you are familiar with that. But let's just see what is this revenue. And this is in there. It is an income. It will be in your SOPL. Cost of sale also will be in your SOPL. Admin will be in your SOPL. Director's remuneration, this is an expense in the SOPL. Same goes here. All this will be in your SOPL. Alright. Then you will have also to classify those items that will be in the statement of financial position. Allowance is actually for the impairment of trade receivables. So this is a negative asset account. It will that later be reduced against the trade receivable. Right. You also will see that taxation paid here is an expense that have been paid. So this will be later in the statement of financial position for the tax recoverable or tax payable. However, for the taxation expense, we are going to find out how much is that, and that will be put in the statement of profit or loss. For the share capital, that is item in the statement of changes in equity, and later will be put in the statement of financial position. Same goes for retained earnings. These are item in the statement of changes in equity. Long-term loan is the item in the statement of financial position. Be careful with the interest if there is any. The property, plant and equipment, all this item here is actually the one in the statement of financial position. Only that the accumulated depreciation, they are actually negative asset account, the contra asset account to the property, plant and equipment. You also have the asset revaluation reserve. Asset revaluation reserve is going to be shown in the statement of changes in equity. This is the beginning balance, and the investment will be shown in the statement of financial position. Same goes for all this item. So we have already classified that. Next, we look at the first information. The first information is on bill and wholesales. So that will be adjusted in the statement of profit or loss. That amounts to 80,000 that was made during the year 20th of December 2020. It was not recorded in the books. So the customer has not made any payments for the goods. However, it is assumed that the closing inventory has excluded this goods accordingly. So what I'm going to do first is, my suggestion is first do the adjusting journal entries. Then you can proceed with the workings for the expenses, income, or maybe other expenses. And the third one, you should proceed with the preparation of statement of profit or loss. Make it very organized for all your workings. Then you will go on doing your statement of changes in equity, proceed with statement of financial position, and finally you'll be doing the notes on the property, plant and equipment, or whatever required by the information. So to start, I've already prepared some journal entry for you. You can see it here, right? You can see next here. So let's start with the first item, the revenue that was from the bill and wholesale. So you were informed that it was not recorded. So it was not recorded in the books. So what you need to do is to record. So to record, what you will do, if you can see here, I put information number 1 and I'm doing the adjustment for information number 1. And therefore, I'm going to record the revenue. So the revenue are being recorded here. So when it is recorded, debit revenue, this one is the other way around, so we have to change it. So we just have to do that adjustment here. Make sure that you don't repeat that mistake of having the journal entry the other way around. So I'm doing the correction here. Okay, done with that. So we have 80,000, and the credit to the revenue here will be later adjusted in your statement of profit or loss. This one will be adjusted in the statement of financial position. So the first one is done. Second one, we will go on looking at the second item, which is on the customer on 25th of February, which is after the reporting date. You found out that the customer was declared bankrupt, and this is events after reporting period. However, 25th of February 2021, still before the authorization date, which is authorization date here, 31st of March. So therefore, this is an adjusting event, and you need to go and adjust the bad debts because the customer was declared bankrupt. To do that, you will be doing this. You are going to debit the allowance for impairment since the allowance has been provided. So now you are going to go and adjust against the allowance. The trade receivable will also be credited. So that is your journal entry for 440,000. Later you may have to adjust also your allowance for impairment of trade receivable. Next is the number 3. Number 3 is information related to PPE. So I have numbered the information here because here you have just bullet. So what I do is that I put here A, I put this as B, and I put this as C, so that it's easy for us to do our journal entry. So here 31st of December 2020, you have the company, the first one that I numbered as A because I want to do the journal entry here as what you can see this side of your, which is on the right side. The company adopts revaluation model for land, and you are informed that the land on the at the end of the year end, it was increased to 20.3. So there was an increase in fair value. And for land, you don't have to go and find out what is the carrying amount by adjusting depreciation, because land is not depreciated. So if you take the land figure here, which is 20 million, you can find that in your information here, right? 19.8, sorry, this one. You will compare with 20.3, and you can see that there was a surplus. So I've already put the item surplus. So it was the second revaluation. Why it was the second revaluation? The reason is because if you go down to information B, you were informed that for other asset, which is also PPE, building and plant and machinery, it was using cost model. For land, it uses revaluation model. So therefore, if you can see here in your trial balance, you can see that there was a balance here, 800,000. That revaluation reserve balance here relates to revaluation reserve, which relates to land, meaning that this is land revaluation reserve. So there were some revaluation that has been done in the past, and the balance that give rise to the surplus is 800,000. However, on the second revaluation here, it was still a surplus, so you don't have to worry that much because you don't have to offset anything, you just record as it is, unless this is a deficit. So you may have to go and offset against the revaluation balance of the land here. So this one relates to land. However, no adjustment needs to be done to that for the purpose of journal entry. So we straight away go and debit the land and credit ARR with the difference 500,000. Next, that was done for one of the information 3. Then we go to the next one, B. The second one is information on building. It was being depreciated over the useful life of 50 years. So for the building, there was 50 years, and that was for this building. And for the plant and machinery, it was 10% per annum. So plant and machinery, it was 10%, and this is for plant and machinery. And if you can see, for plant and machinery, it uses reducing balance method, and the building uses straight line method. So building uses straight line method. So we will have to make sure that we calculate them correctly for both. So we can start with the building first, because there are no addition or disposal of building or any revaluation for the building whatsoever. So we can record the depreciation of building. So you can see here, you should have done this as well, where you will take the cost of the building, since it is straight line method. Take this and divide it by 50 years. So the 50 years, so that will be debited to the profit or loss under admin expenses. And accumulated depreciation building is 200,000. Remember to adjust this later in your notes on PPE. Next one, you can see that there are one more adjustment in number 3, which is the adjustment related to machine. So for the machine, just now that we have already decided, just hang on. Okay, for the machine, you would see that it uses on 1st of January 2020, which is at the beginning of the year, one of the components of the machine were being replaced. So when the component was being replaced, you can see here on 1st of January. So therefore, it was being replaced. What was the reason it was being replaced? It was being replaced to actually enhance the production capacity. So there was a new component being replaced. The new component was 550,000 new component, and the old component was 500,000. So the old component must be de-recognized or must be removed, and now you will give way to the new component. So what you need to do is you need to find out how much is the depreciation. How do you record this in terms of the journal entry? So I provided it here. So for the first item, you need to replace the old component with the new one. So depreciation related to the old component, which is based on this item here, first, it was bought 1st of January. From 1st of January 2018 until 30th or 1st of January 2020, that was 2 years. So you need to go and remove that 2 years depreciation, since it was using the reducing balance method. The first year I was recording here at cost, right? The first year 2018. The second year, this is at carrying value. So this one was at carrying value. So therefore you will have the carrying value in this during the second year. It would be 450,000, and if you add up 50,000 depreciation from the first year 2018 plus the one in 2019, 45, so you have the total to be 95,000. So when you remove debit accumulated depreciation, at the same time the machinery the old machinery or the component actually must also be removed, the old component. So if you remove, you will go and credit the machinery. So this one, you will credit the machinery, and earlier on you debit your machine accumulated depreciation, right? So if you do that, you will later notice that there was a difference. That difference is actually amount that you need to write off, which is your loss, right? So that loss on disposal will be 500,000 minus 95,000. So that was the journal entry for the first replacement of old component, the accumulated depreciation using reducing balance method that were eliminated together with the incurred the loss on disposal. You incur loss on disposal. Next one is after the replacement of the machine, you buy new components. So I split the journal entry that I put it here so that you have a split separate journal. So you have the new component that costs you 550,000. You purchase that by check. So debit machinery, and you credit your bank, right? So next one is that will also give impact in your notes on PPE. Same goes for this will also give impact to your notes on PPE before you arrive at a new carrying value. The next one is to calculate the depreciation after the replacement. Remember, the replacement was on 1st of January, so depreciation here would be the new depreciation that will be from 1st of January until 31st of December. So if you can see the workings that I put here, so I just put it here. You can see the workings. First, you put the find out the carrying amount on the replacement date. So how do you get this? This one is actually the cost of the machine. So let's see, cost of the machine. It was 8 million. And then you need to find out the carrying amount. So you must remove the accumulated depreciation. So therefore, what you will do is you are going to find out the carrying amount here. So when you do that, you'll see that it is 5832. This is 8 million, and the one there is 2168. So make sure that you get it right. Okay, so that is 5832. The next one is our focus is to find out the carrying amount after replacement, which is the one here. Carrying amount after replacement. So I just highlight with a different color. Okay, that one. So you need to find out what is the carrying amount of the old component. Remember, the old component was 500,000. We have already determined that earlier, right? 500,000, the one here. And the new component is 550. So find out what is the carrying value for the old component. Take the component 500,000 minus the accumulated depreciation. The accumulated depreciation we earlier calculated, that was 95, so you will get 405 to be the carrying amount of the old component. Then you add with the cost of the new component 500,000. We are going to include that in the calculation of depreciation, so 550,000. At the end of the year, the carrying amount after replacement, by the end of the year, it was 31st of December 2020. It is 5977. Take that and multiply with the 10%, and that is for 1 year, 597770. And this is the new depreciation after the replacement of the old component with the new one. Next, we go to the next one. We are done with that. We go to the next item. The next item that you have is the fair value model being used for the IP, investment property. So if you can see here, the as at 31st of December, the fair value was determined to be 6.5 million. No adjustment has yet been made to rectify the changes. So if you go to the statement of to the trial balance, you will see that the amount is 6 million. So compare this 6 million with that information given there, 6.5. So you will see that the fair value more under fair value model, the gain on fair value change of investment of property is 500,000, where you take 6.5 minus carrying value 6 million, sorry, 6.5 million minus carrying value 6 million, so we have 500,000. And this can be disclosed later as part of other income in your statement of changes in statement of profit or loss. You are going to disclose then as part of other income. Next, the next item is adjustment on inventories. So there was a write down of value. If you can see the information here, 39, and now the NRV is determined at 37. So there was a write down of inventory from cost of 39 to NRV. So this is the one here. You can see the information number 5. So when you number the question and you number your journal entry, that will make things much simpler. So I put that color for you. Next would be the next item. Let's see the next item. So the next item is on contingent, on the item under MFRS 107. Under MFRS 137, sorry, 14th of December. The customer sue the company. So the customer sue the company, so there is somehow a legal liability. So meaning that there is a present obligation, legal obligation. So 100,000 is the amount being sued, and that was because the customer suffered injuries while using the appliances purchased from our company. In the opinion of the lawyer, it is possible that the company will be held liable. The word here is possible. If the word here is probable, you are going to treat it as a provision, but here it is a possible obligation, so therefore that is going to be not recognized, but it will be disclosed as contingent liability. So no journal entry is needed. You're going to make a disclosure notes for number 6. For number 7, this is regarding taxation, what you have learned before. So that was 7.5 million. So you need to go and look at how much was the tax paid, 7.2, and the tax that was estimated for that year was 7.5. So therefore, the taxation that should be payable during that year would be 300,000. So you debit tax expense, you credit the tax paid, because now you are going to find out how much do you need to pay additionally, and that was an extra of 300,000. And that would be shown later under your current liabilities. So we are done with that. We can now prepare our financial statement. So we start off with the revenue. So of course, the revenue, you are going to take note the revenue coming from the one given in the question here. So make sure all items are being included where necessary. So we're going to include the revenue and the cost of sales. So revenue here 410390, and you have one item just now for information on bill and hold. Remember, we credit revenue where I make some correction earlier on. So therefore that was the first item that you will show is that, and then the second one is the write down of the inventories. So you can also refer to the adjustment that I've done, information 5, or you can refer to your question as well, but you can refer to the adjusting journal entry. For the admin expenses, I will show you later, but I will just show you first the selling and distribution, since there are no information saying that the whatever item are under under selling. So we're just going to take the selling item here, which is distribution cost, just include that. For the admin, you will have to do some calculation, but I'm going to do that. But first I'm going to put one item which is near to that list of expenses, which is investment income. So your investment income is going to be included later, but let us look at the information that we have done much earlier. Remember this one, which is our IP. This information number 4. So I'm putting the IP, increase in fair value change in IP, here as part of other income. So let's look at the working for admin expenses. For the first one, you are going to include what was in the trial balance, right? What was in the trial balance. the one given here, and then you are going to also include the director's expenses and other expenses that are under admin. Investment income, we have already included that. We are going to include that separately because this is investment income, normally comes from interest and dividend income. So let's see what was that item. So I've listed there for you. First one is, of course, director's fee. The second one is the loss on disposal that we earlier have done the working. If you can still remember, that was what you have done much earlier, 3C1, where we were doing our replacement of component earlier, and then the depreciation that we have already calculated, and then you can see depreciation of plant and machinery. So if you do that, you will get this figure. The total would be 80,067.7. I'm putting this just to cross refer, so you can put it here, and that would be your item. Next, finance cost. So in your case, there are no change to the finance cost. You are just going to take what was given in the question. So the finance cost is 2835. Investment income is 540. So you just include that to the correct line item. For tax expense, we have already decided. Make sure that you have calculated them all correctly, even for the profit from operation or the operating profit, profit before tax. Make sure you have all the format being done nicely. Profit for the year. So profit for the year would be 93,087.3, and for this part you have to include your revaluation surplus of land. Remember, we have done it earlier, and your total comprehensive income would be this marsh. So we are done with that, with the first item, which is the statement of profit or loss together with the working. Next, we go on to the statement of changes in equity. Statement of changes of equity will focus on the item of equity, asset revaluation reserve, retained profit, and ordinary share capital. So we include that column here. You can see the three columns, and I also included a total column. The first thing first, put the balance that was given in the trial balance. The balance given in the trial balance would be this one given in the question. So the balance would be the 385. Take that from your trial balance, and then you have to include the profit for the year. Remember, profit for the year that we have just calculated was 93,087.3, so that one must be included here. And in this question, there are no dividend being declared or paid or proposed, so don't worry so much. No dividend will be declared, since this company only has ordinary shares and they don't declare dividend in this accounting period. Next one is, you are done with this, so very simple item. Next is to do your statement of financial position. So to do that, you will first start with the PPE. I will do it last. I will start with the investment property first. So investment property, the one that you should show here would be the one after you add the changes in fair value. So you need to include the gain on fair value change. So this is actually fair value gain. Right, the investment, no changes. The PPE, if you have done them correctly, you will see that later. If you have done them correctly, that should be 33,479.3. I will show that in your note 1. Next one is the bank balance is 550. This is actually from the PPE that you acquired, right? You acquired the PPE, so that was the reason it has reduced. The inventory, this is due to the write down. This trade receivable here, actually this one is due to the bad debts being written off, and this 80,000 here is actually the bill and wholesale. So you may have here bill and wholesale, yeah, and this one here is the bad debts written off. So the total would be, you can refer that to the information column which I have already included. For the allowance for impairment, the amount would be 1540, which is the balance given there, 1980, and the bad debts written off that you have removed from the allowance. There are no new estimation for the as a credit loss that has been done. If there are any information, you should also include. Next is the share capital. So remember, this one are taken from where? Taken from your statement of financial position. So just take it from your statement of financial position, where you have this item here. These two items will be included in your total here, reserve, right? And the next one is just including the item for share capital. If you have only orange share capital, that's fine. Next one is the loan. So for the loan, I'm showing everything now for you. The figure in that does not change. Same goes for the trade payables, no change, but the tax payable, you can see there was 300 based on our adjusting entries. Next is the PPE. The first is for you to put the balance at the beginning, cost or at valuation, and this is at revaluation. For the land, building and plant machinery is at cost model, so that's why you have cost stroke valuation. Surplus on revaluation, there was only one surplus coming from land, so we put that in the total. Addition, it comes from the new component of machine. No changes to the item on building, no changes. And the disposal here is relating to the old component being disposed, old component that you dispose, right? So you have to do that correctly. So for the disposal, you are going to reduce. For the addition, you add. So the total is here. Next is the next item to find out the accumulated depreciation. Here there are no impairment whatsoever, so you just keep that. So there was no balance for this because it was not a depreciable asset. So you just put the balance for the depreciable asset. Take the one from the trial balance. Okay, so let me just improve the size here for you. Take the one from the trial balance, and the disposal is the one given in your question. Remember, we have the accumulated depreciation, so this one is disposal here is relating to elimination of accumulated depreciation on disposal. So that 95,000 for the old component. The charge for the year will be the depreciation, and you can see that the depreciation for building was 200,000 we have calculated, and this one I've shown you the workings, 597.7, which is after the replacement of the new component. And at the end, the item here would be this item, and that is the balance for the accumulated depreciation. To find the carrying amount, you will deduct that cost with the accumulated depreciation at the end of the year, and you will find that figure that I've shown here. So this is the one that you will go and show in your statement of financial position, that figure there. And the last item is the notes on the contingent liabilities, the item that where your lawyer was just having an opinion, it was just a probable obligation, a possible obligation. So that was the item here. So that's it. Let's see how you have that done, and make sure that these are included in your statement of financial position, your item that I mentioned just now, which is the item for PPE. and make sure that all items have been included. We have done that all. Make sure you check each of this item correctly. With that, I thank you for watching. I'll see you when I will see you. Till then, Assalamualaikum and have a pleasant day ahead.